Welcome to this week's episode of Your Stock Request for the 1st of September. Hi, I'm Michael Gable, Managing Director at Fairmont Equities. Your Stock Request is the weekly video where I take your requests and analyse the share price charts. So this week we have Bwx, Bendigo and Adelaide Bank, Comet Ridge, Woolworths and Mineral Resources. So if you have a request, please send it through. Make sure you've signed up to the free newsletter, but our better tips come out every Tuesday in the Dynamic Investor Report, so make sure you're getting that report. But if you do enjoy these videos, we'd love you to share them on social media or even leave us a review. Our main business is in portfolio management, so if you'd like to have a trading account with me and have me personally help you, then please let me know. And all the advice here is general only. So this is a daily chart of Bwx. As you could see, it's still, it's got a massive downtrend, and it's still in a massive downtrend. Look, there were plenty of warning signs, I think, in this one to be getting out. I mean, initially you had this sort of double top here, and then as soon as it broke that low, that meant the uptrend was over. And as we could see, it started to make lower highs, lower lows, and even these big moves down on volume. It can be hard to sell on a big day down like that, but as you can see, it just the trend just continues in that direction, and there's been a few of those big volume sell-offs. So, we need to see the higher highs and higher lows. Doesn't look like it's anywhere close to doing that. You could maybe say that it's trying to do a base here, but that doesn't look much different to what it was doing here. So I think at the moment there's still risk of downside. All right, Bendigo. So, as we could see over the last sort of year or two, it's just a very volatile stock. I think it's just too volatile to trade, to have an investment in. And you could see that the sell downs are very sharp, so they're much more pronounced. You get the occasional spike in terms of buying, but you could see the little moves higher when it goes up, and then the big moves on the way down. So back here, it's sort of near these low points. Maybe it reverses here. Looking at the potential RSI buy signal, but I think the momentum is clearly to the downside still. And to me, this is a stock that you'd be looking to short on rallies, not looking to buy. All right, Comet Ridge. So we could see that it's had a nice uptrend for over a year now. Then it gave us this sort of sideways consolidation, so it consolidated the uptrend. And then, as we could see a couple of days ago, it broke higher, good volume. If I zoom in, we could see that yesterday it sort of did a bit of a retest and closed flat for the day, so that's good retest there. I just think this one looks like it'll just get back into an uptrend now. You'd have to stop just under 20 cents, but in my opinion, I think it'll just continue to trend higher. Okay, Woolworths. If we zoom out a couple of years, we could see that it's just not a trending stock, and it's in the middle of that range. So it's not something I'd want to hold if it's not heading up. And most recently, we could see that it sort of rallied nicely, but as soon as it got near the April peak, it rejected. And we're not talking about a bit of a consolidation. There was clear selling, and you can see the volume. So yeah, look, the price action I think is now negative. At best it needs to sort of level out here. If it was to stop going lower, it'll need to use up more time on the right hand side. But I think the risk for this is still to the downside. I'd expect it to be trading down here. Okay, Mineral Resources. Look, this has been a good trading stock for us over the last year. In and out, you could see the big ranges. Most recently, we had a recommendation here in mid-July. In terms of the last couple of weeks, we could see that there's been some huge ranges, a lot of volatility. So it is looking quite dangerous now since sort of mid-August, a lot of volatility. Look, it's one that I got out of about a week or two ago. For clients, it managed to get slightly higher, but I think it looks vulnerable here because essentially what you've got is a false break. So broke higher, but then it got slammed back into the range. So look, at best, what it needs to do is if it could consolidate under this line, say hold above 60, then it'd be setting up for the next trade. But I'd just be wary of this. Obviously, if we see some further volatility here, I'd be looking at a pullback somewhere back into the range. Okay, well that's all for this week. If you have a request, send it through. We'll try to cover it next Thursday for you.